$60 trillion. That is how much money moves through one crypto product every single year. And until now, most American traders were completely locked out of it. We are talking about perpetual futures. That just changed in a big way. What is all that? You don't know? Don't confuse yourself and don't worry. Your brother Charlie is here to make you understand. Let's start simple. What even is a perpetual future? Think of it like a bet on the price of Bitcoin or Ethereum that never expires. Normal futures contracts have an end date. Perpetual futures skip that completely. No expiry, no settlement date, nothing to roll over. You can hold your position as long as you want, whether you are betting the price goes up or down. To keep the contract price in line with the real market, there is something called a funding rate. It adjusts every 8 hours. It is a small balancing payment between traders holding long positions and traders holding short positions. Now, here is why this product is such a big deal. Perpetual futures are the most heavily traded crypto product on the planet. We are talking more than $60 trillion in global trading volume in a single year. The problem is, almost all of that volume happens on offshore platforms far outside the reach of U.S. regulators. American traders either used workarounds or stayed out of the game completely. That is where Kraken comes in. Kraken has officially launched perpetual futures trading for eligible U.S. clients. The key detail is that these contracts are fully regulated by the CFTC, the Commodity Futures Trading Commission. The contracts are listed on Bitnomial, a CFTC-regulated exchange that Kraken's parent company, Payward, acquired. The products are also offered through an entity called Kraken Derivatives US, registered with the CFTC as a Futures Commission merchant. In plain English, that means real oversight, real compliance, and a real U.S. regulatory home for a product that used to live almost entirely offshore. At launch, eligible traders can access perpetual contracts on major assets including Bitcoin, Ethereum, Solana, XRP, Cardano, Chainlink, Dogecoin, Litecoin, and Avalanche. Here is the smart part. These perpetual positions sit inside the same futures wallet as Kraken's existing CME-listed futures contracts. Traders can manage both side by side using the same funds on the same platform without juggling multiple accounts. So, why does CFTC regulation matter for U.S. traders? It comes down to trust and protection. A CFTC-regulated product operates under strict rules on how funds are handled, how trades are cleared, and how the exchange is monitored. That is very different from offshore platforms, where there is little to no accountability if something goes wrong. For U.S. traders, this opens the door to trading one of the world's most popular crypto products without stepping outside U.S. law. It also tends to attract a more serious type of trader. Industry voices say adoption could follow a path similar to spot Bitcoin ETFs, with professional traders moving in first, followed later by investment advisors and asset managers. This move also fits into a bigger shift across the industry. The CFTC has been opening the door for more regulated platforms to offer perpetual-style products in the U.S., and Kraken's launch adds another major piece to that puzzle. It signals that crypto derivatives are slowly moving out of the offshore shadows and into a framework U.S. regulators can actually monitor. At the end of the day, this is a meaningful step toward making advanced crypto trading tools accessible to everyday American traders, without forcing them to rely on platforms outside U.S. oversight. Whether you actively trade derivatives or you are just trying to understand where the crypto market is heading next, this is one of those moments worth paying attention to. Before signing off, this video is for educational purposes only. Nothing here is financial advice. Crypto trading carries significant risk. Always do your own research before making any investment decisions.